Hello, with me today I have Alex Crooke, Portfolio Manager at Bankers Investment Trust. Good morning, Alex.
Hello. Yeah, very well, thanks.
Your portfolio, or the trust, is overweight the UK. So why is this, and are there any companies that stand out for you at the moment?
So the UK, I think it's a hard one to make a really strong growth story about, but actually what lifts markets often is a lack of increasing bad news. And I think the UK has weathered an awful lot, shall we say, in terms of the effects and benefits or lack of them through Brexit, the challenges of the politics about, 4 prime ministers in the last few years. So I think when you look at a market, I was always, told by my previous boss that, the interesting opportunities in markets are often under-researched, under-owned and unloved. And I think that sums up the UK stock market to some extent. It is unloved. And I think actually just reducing the negatives, there is an election this year, so we should have 5 years of reasonable certainty of whoever's going to govern the country. I do think, we're seeing the low point of growth, and we should see recovery as one hopes the Bank of England starts cutting rates. And we should see some recovery. So I think that lack of bad news. Meanwhile, there's some very cheap stocks in the stock market. I mentioned retail banks, sort of Lloyds Bank, looks to us a very attractive investment. But there's a lot of stocks in the UK I think are very well managed, good growth characteristics, not the highest, but actually pretty low valuations.
Okay, well, you're underweight the US. Which firms in the US do you really like at the moment?
Our largest holding, which is probably one has to say what we like the most, is Microsoft. It's owned by a lot of global trusts, one has to admit, and it's got just a very nice dynamic of a business which has turned pricing from sort of buying software on a one-off basis to having like an annuity business where you have subscriptions for Office and other services. So I think that subscription model has worked very well for them. They've invested very heavily obviously in the cloud services, which is growing very strongly. But the real driver in the last year or two has been AI. Big investments coming through there, and a lot of, we think, productivity and revenue opportunities to come. So that's the biggest. JP Morgan, again, back to my point on retail banking, looking a very good industry. And then outside of that, I think one more slight one, less of the growth, but more of the reliability of the returns, is healthcare, which has been pretty dull actually outside some of the manufacturers of obesity drugs. But actually it's a really solid sector to be invested in the long term. So we own companies like Medtronic, which does a lot of the heart valves and heart, various things to do with the heart. And then Stryker, which does a lot of implants, and United Healthcare, which manages hospitals. And I think there's quite a strong opportunity in there to find some good stable businesses.
Do you think US tech stocks are overvalued at the moment, and therefore owning a global or US index is dangerous?
Yeah, I think my challenge with the indices is, they effectively, just follow the largest companies in the world, and that might not be where the best opportunities are, and it also doesn't follow where the economy and the GDP is manufactured around the world, or where that might be growing quickest. And if you look at the wealth, in terms of GDP around the world, it's about a third in America, it's about a third in emerging markets, including China, and about a third of what would be Europe and Japan, the sort of other developed markets. And I sort of tend to look at that as a model of where do I want companies to invest their assets, where do I see opportunities for growth, and then equally, where am I overpaying for it? And I think one has to say some great growth companies in America, but should it be 70% of the global market, which it is in terms of listed companies? I'm not sure that feels very high to me. And so there are some great tech companies. There has been, price rises where valuations are looking high, but they need to keep justifying that growth. And we'll see whether that comes through in the next year or two.
Okay, do you move the portfolio around a lot? I mean, can you talk me through some of your recent portfolio changes?
We tend to, on the whole, let the portfolios sort of grow and expand with the returns they generate. Having said that, as an investment trust, we can use leverage gearing. So we've borrowed over long term, we've issued long-term notes to other investors, and the cost of our debt is only about 2.7%, so running out all the way to 2045. So we've got that leverage to invest and pull back, and obviously, if we pull it back into cash, it yields 5. It's higher than the cost of our debt. So it doesn't hurt returns in that sense. And so I think the last few months, really, markets have risen very strongly. We've sort of taken a bit of money off the table to reduce that leverage, and that's really been the key asset change in the last few months. Again, as I say, we had a very strong end of 23, 24 started in a very strong sense. So I think holding some dry powder is probably sensible at this point, and so we've reduced really principally Japan, which has done so well, but we're still very overweight there, and then it's taking a little bit of money out of Europe as well.
Okay, are you able to tell us any of the companies that you've reduced your interest in?
Yeah, we've tried not to sell whole companies. I think that's, when you're reducing your leverage, it's easier just to sell a little bit of everything. It's very economic and low cost to do that. So most of the positions we're quite happy with. We've been settled. Really, turnover has reduced in the last 6 to 12 months. I think the outlook, we're still in this strange point where, will rates get cut? How quickly might they get cut? Would that push you into more cyclical companies, which benefits as economies pick up, or will that not have much effect on economies? So I think it's quite challenging at the moment with that sort of macro view.
And Alex, the final question, and one we ask everybody, do you invest in your fund?
I've been adding to my holdings every year since I started managing this in 2003, and I never sold a share. So yes, it's a very substantial part of my investments.
Alex Crooke, Portfolio Manager at Bankers Investment Trust. Thanks very much for joining me today.
Thank you.